Hey everyone, this is Emily and I'm a digital transformation consultant at Hyperbots. I am really pleased to have John Silverstein on the call with me, who is the VP of FP&A at Extreme Read. So thank you so much for joining us, John.
No problem. Thank you for having me.
So, John, the topic that we'd be discussing today is managing and scaling the chart of accounts in QuickBooks Online. And the first thing that I really want to ask you is what are some of the key considerations when setting up a chart of accounts in QuickBooks Online for a small business?
Yeah, when setting up for chart of accounts for QuickBooks Online, it's critical to be simple and logical, but you also need to look forward a little bit with the growth of your business. Look at your business model, the industry standards, because you want to be aligned with how that's going to be and how you can look at your financials compared to either other companies or if you eventually go for a sale or you acquire another business, it's good to be in line with that. So assets, liabilities, equity, revenue, expenses, you want to make sure that those are broken out into the proper categories for that industry specific and that it also meets your regulatory. You want to enable the account numbering early. This is a big mistake I see a lot in the smaller businesses is that they just name and their names are all over the place and they change over time. So it's hard to trace and understand the data as it moves. And so if you enable the account numbering, it's easier to integrate and to work with other systems as your business grows. So it's important to implement that as early as possible. It creates a little bit of extra work, but it's not really that much.
Got it. So, John, as a business grows, how can it maintain an effective chart of accounts in QuickBooks Online without having to move to a more complex ERP system?
Yeah, it's actually surprising how flexible and how good and what rigor and things you can actually get into QuickBooks Online if you enable the right things. So it's important to work with your accountants, and if you don't have one internal, but if you are the accountant and things that you look and leverage, the platform of QuickBooks like classes, locations, the other dimensions that are there, so you don't have to overcomplicate. I see a lot of companies that don't enable classes until it's too late, basically. And again, it gets really hard, and you've overcomplicated your chart of accounts to try to do something that was really could have been solved by classes or locations and things like that. So it's also important to try to understand what those dimensions, it goes back to the first question about industry and things that you do that. So segment the data by you have to think about how you're going to measure and monitor the business. Review and monitor and make sure that that chart of accounts is always in line with how you're going to do it. If there's any redundant accounts, close those, inactivate them, make sure they're properly categorized, use sub accounts, use a hierarchy that helps out, and you can go pretty far with QuickBooks Online. I've been in companies that have made it to that $100 million mark on QuickBooks, so it does scale more than
Mhm.
what many would expect.
Got it. So, any common mistake, John, that you would have seen small businesses make when setting up their chart of accounts in QuickBooks Online?
Yeah, one of the things is the biggest thing, and this goes across the board, any system, is they put too many accounts and they don't enable the other dimensions and things. So then you try to use an account for everything, account per vendor, account per customer, and things like that. Just remember that there's reporting and things that can get you there without having to break it out in your chart of accounts that overcomplicates it. And then there's more mistakes and it causes a lot of confusion as you bring in new people, or you might have to have another accountant or other people look at it or your management looks at it and things, and it gets more confusing, and it even makes it harder for audit as well, and it creates a lot of clutter.
Got it. So, how can businesses create a flexible and scalable chart of account structure that supports growth?
Yeah, the best way to do this is to make sure that you do have the numbering system that allows for the expansion and to do add-ons and things, and to make sure that you can change the names without having an effect on other reporting and things. You need to leave the gaps in between the account numbers so you can add accounts easily, use sub accounts to track more detailed information so you can have the details when you need to answer certain questions and have it at your fingertips. Make sure that you have that available, and then you plan on growing so you have those spaces and things, and then this approach will allow you to keep it simple but also have the detailed financial analysis and reporting.
And why exactly is it important for different businesses to regularly review and optimize their chart of accounts in QuickBooks Online?
Yeah, it's critical to ensure that the accounts reflect how your business is today. If you're selling new things and maybe your models changed, maybe you were initially transactional or your pricing wasn't, it was more value pricing and things like that. Or yeah, when you're smaller, you might have more give. But as you grow in things, it's critical that you have the information there that the accounts reflect your current business operations. What's your cost structure look like? Is everything in-house? Are you doing things yourself? Are you outsourcing? Those types of things, it's critical that you have that at your fingertips. You also don't want to have to roll up many redundant accounts or account hierarchies even to try to get to a answer in your financials. So make sure that you continue to look at it so you know which accounts to use, that you're answering the questions that you have on your financials. And it also alleviates the errors of things going to too many different places, and then you have to try to figure out how to map it all back together.
Got it. So, John, can you explain the role of AI in maintaining chart of accounts integrity in QuickBooks Online?
Yeah, so AI, and this is something that's going to have a significant impact going forward, is on chart of accounts because it can keep that integrity. It has the knowledge to recommend and to detect errors between how what's posting to which accounts, and and it can make sure that the definitions are consistent on what's going, and it can recommend even to when you should actually create a new account and break it out. It could also tell you that you have duplicates or missing entries. So AI algorithms will enforce consistency in accounting. It'll make it easier to do analysis. It'll make it easier to be compliant. You'll have clarity on where things should be booked and why. It can also have predictive analytics to suggest, hey, you need a new account, you need a sub account. This is a hierarchy, and to go into the patterns of transaction history to recommend that. You can also have real-time data validation, so your book closes and things will be faster and more accurate. This is critical as you go through to make sure you have that consistent financial data.
So, a little bit about ERP migration, John. So, how can AI help a business that is considering migrating from QuickBooks Online to, let's say, a more complex ERP system like NetSuite?
Yeah, so if AI could help you start getting there, the more you're aligned with how the bigger ERPs work and you have classes already set up, you have the things set up in QuickBooks Online that are more aligned with NetSuite, it's easier to migrate, and your processes is if and flows, if they're proper and doing the same things as some of these other ERPs, makes it a better data integrity and continuity and easier to go through the conversion without having to do a lot of data cleanup. It also can automate your reconciliations and validations through the migration to make sure that everything's in sync. It will save a lot of time, reduce the errors. Maybe the ERPs will get a little bit, it won't become a bad three-letter acronym. It will become something that's a little more doable and foreseeable to go into an ERP that makes more sense for your business without a huge lift in cost and time.
And just one last question, John. So, what are some best practices for using QuickBooks Online as a growing business? And when should a business consider moving to a more robust or more nuanced DRP?
Yeah, so the one thing I would say is that you need to try to get as much structure as possible in QuickBooks with numbering systems, reviewing the chart of accounts. A lot of this structure and things and controls in QuickBooks tends to be manual in process where you have to do manual reviews or have AI review it now. You have that option, but you didn't in the past. A business should consider, though, moving to a more robust ERP when they're really getting into more complex workflows and complexities in like consolidations and things. If you have multi-entity management, QuickBooks doesn't really, it's a total separate entity. The roll-ups are hard and complex. They're getting a little bit better, but it's not really made for that when you get into some of the currency and other things that you might face as a larger enterprise. QuickBooks isn't really made for that or designed for that. So if you need more sophisticated reporting, you have more data too, it's probably better to move on to a tool like NetSuite.
Got it. Thank you so much, John, for being here and talking to us about managing and scaling the chart of accounts in QuickBooks Online. It was really great having you, and it was a really fruitful discussion. So, thank you.